the Bank Secrecy Act, if you're not familiar with it already, is a kind of sweeping set of requirements on financial institutions. And financial institutions can be banks, broker-dealers, car dealerships, casinos, Western Union, and crypto companies. That requires them to keep records of the transactions that their customers make and surveil those transactions for evidence of illicit activity. And where a financial institution finds evidence of illicit activity, they need to report it to the government. So there's a lot of tentacles of the BSA. But let me kind of start at the beginning in 1970, because the BSA in 1970 was a lot smaller than the BSA in 2023. Initially, the BSA was put into place in 1970 in order to prevent Americans from evading tax laws by using foreign bank accounts. Pretty narrow topic. And the way it did that was, it required record keeping of transactions. But the primary way that it did that was by requiring all of these financial institutions to file a form called the Currency Transaction Report when transactions were done of more than $10,000 in cash. So if you went to your bank and withdrew $10,000, your bank had to tell the federal government, because there was a real fear that you were taking that $10,000 to Switzerland and you were never going to pay taxes on it. Over time, the Bank Secrecy Act has been added to substantially. In the 1980s, it was looked at as a tool to fight the war on drugs. And in the early 90s, we added to the Bank Secrecy Act what are known as suspicious activity reports, which are kind of the true surveillance portion of the Bank Secrecy Act, where banks and other financial institutions need to take a look at their customers' transactions and file a SAR, a suspicious activity report, whenever they suspect their customers of engaging in illegal activity. And illegal activity means an awful lot of things. It means money laundering. Now it means terrorist financing. But it also could mean tax evasion. It could mean child trafficking. Basically anything that is illegal is part of this requirement. And it's the case that there are millions of reports filed under the Bank Secrecy Act every year. In 2019, which was the last year that I saw figures for, but there might be newer figures than that, there were 20 million reports filed. And only a small percentage of those reports are ever looked at. And when you compare the number of reports to the number of money laundering investigations, you don't really see that 20 million reports are leading to a large number of money laundering investigations. So you set aside kind of the obvious difficulties with financial privacy, with government surveillance, with the Fourth Amendment, which I'm sure we're going to talk about. You also have a very real question of what is this doing? What are all of these reports doing? They don't seem to be making anyone any safer. They just seem to be creating a mountain of paperwork that invades people's privacy for very little reason and actually puts burdens on banks and individuals that can keep people out of the banking system. Because either those people are deemed too risky by banks. For example, immigrants that want to send money across borders to states that are, less than stellar in the U.S. government's view in terms of their propensity for illegal activity. And it also keeps people out of the banking system who don't want the government snooping through all of their financial transactions for perfectly legitimate reasons.
It became terrorist financing more recently, but prior to that, there was other justifications. So the justification for this has changed over time.
What's notable is that $10,000 figure hasn't changed since 1970. And in 1970, I saw you could have bought 2 new Corvettes for $10,000. It's not going to get you much in 2023. Adjusted for inflation, $10,000 in 1970 is about $75,000 in today's dollars. So this kind of governmental dragnet brings in so much more information than it ever would have brought in when they initially put the law into place in 1970. So it's expanded by direct congressional action. It's expanded by kind of just letting it roll along and letting the thresholds decline over time. And it's a shadow, or the 1970 Bank Secrecy Act is a shadow of what today's Bank Secrecy Act looks like. And I think it's notable that even the 1970 Bank Secrecy Act raised a lot of questions about whether or not it was consistent with Americans' Fourth Amendment rights, with their First Amendment rights, and with their Fifth Amendment rights as well. And the Supreme Court took up 2 cases in the 70s on the Bank Secrecy Act. One of them was California Bankers Association v. Schultz and United States v. Miller, in case you want to go read some fascinating Supreme Court decisions. And in both of those cases, the majority of the court upheld the Bank Secrecy Act. But it was a slim majority, and the dissenters were pretty adamant. I'll get to the dissenters in a second. But with respect to the Bank Secrecy Act generally, even members of the majority who concurred in the judgment said, this does kind of walk a line, and we'd have real concerns about its constitutionality if it expanded much more from here. Well, it's expanded an awful lot more since the 1970s. So I think it's a very open question what today's Supreme Court would do with it. The dissenters included Justice Thurgood Marshall, who was dissented in both cases, saying that this was an unconstitutional infringement on people's Fourth Amendment rights, that the information contained in bank accounts said a lot about a person, which is also a First Amendment problem, because when the government can take a look into your bank account, they can see who you are, what do you give money to, what causes do you support. You can piece together an awful lot about a person's views, expressions, and other things by looking at how they spend their money. And as you noted, in the 1970s, we used cash for a lot more things. So a bank account in the 1970s didn't give nearly as close to a full picture about how someone's life ran in 1974 as it does in 2023.
That's right. And it's mind-boggling to me that legislation would have passed when we know that it is the government's objective, the Federal Reserve's objective, to have a certain level of inflation. We know that our money is going to be worth less in the future, but yet $10,000 was selected as the amount to report on, and that never has changed. How is that possible?
It's amazing. It is unfortunately not unusual with respect to any sort of level legislation that gets put into place. It oftentimes seems like Congress just forgets to index things to inflation. I don't understand how it keeps happening, but it's not unusual. And we've had kind of discussions, you've seen discussions on the Hill back and forth over the years about going back to fix those numbers. For Currency Transaction Report, it's $10,000. For SARS, the numbers vary, but it's $3,000 if you're a Muncie transmission business, or $5,000 if you're a bank. These are all very low numbers, and the fact that they are such low numbers is one of the major contributing factors to why so many reports are filed. Unfortunately, none of those efforts have been successful to date. I think maybe we'll see some more efforts in 2023 because they kind of seem to be a perennial issue. Hopefully it'll get more traction at this point, because it's really in everyone's best interest that if we're going to have something like the Bank Secrecy Act, And I don't think we should have something like the Bank Secrecy Act at all, because any of this surveillance is problematic from a Fourth Amendment standpoint. But if we're going to make the choice to have the Bank Secrecy Act, it doesn't make a lot of sense to just throw a whole bunch of useless information at law enforcement, who then has to spend their time digging through a haystack for the needle. We should at least do law enforcement the favor of making sure that the haystack's a little bit smaller and a little bit more targeted.
Right. Ironically, we're making their job even more difficult by
Yes.
throwing so much data at them.
Yep.
And before long, $10,000 in 1970 is going to be like a $10 bill. So
Yeah.
they're going to have a whole lot of information. I thought it was interesting you said you don't think we should have the BSA at all. So that's a really important statement, I think. And it does get to this issue of what is the appropriate role of government and the kind of surveillance that government should be involved in with regard to watching what people do in their financial transactions and capturing all of that data. In a perfect world, let's say we don't have the BSA, what are good ways for policymakers to think about addressing these issues that are different than the BSA?
Yeah, well, I think I start from the position that the Fourth Amendment has already figured this out for us. We've had the Fourth Amendment, which sets the balance between the government's need for information to fight crime and an individual citizen's rights to privacy. And the government can get information to fight crime. They just have to get a warrant. They need to prove that they have the right level of need for that information. So on the Bank Secrecy Act kind of financial privacy point, we've proposed, and I've proposed, and I think this would be the way to go, is the banks should be required to keep records, but the government doesn't get a hold of those records unless they make the proper showing to get a warrant. You don't have fishing expeditions, you don't have the surveillance that's happening, but where there's a real concern about illegal activity, the government can still investigate. So that's, I say, the kind of basic balance that the Constitution has already struck. And I think it's also the case when we think about whether we need something like the BSA, we tend to just assume that if you got rid of the government surveillance in this space, it would be field day for criminals. Every bank would say, please, 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 come bank with us. We love criminals. And that's simply not going to be the case. Prior to the BSA and in a world without the BSA, there are still very real risks that are to financial institutions for dealing with criminals. Not only the legal risks of aiding and abetting or co-conspiratorship in some circumstances with respect to their clients, but also the reputational risks. Most banks are not going to want to be the bank that's known as the terrorist bank, and are going to continue themselves to keep an eye on their customers to make sure that their customers are not financing terrorism on the side. And to the extent that you have a bank that wants to be the terrorist bank, pretty sure that law enforcement's going to figure that out pretty quickly.
Might actually make the investigations a little easier.
It may very well do so. So in a world without this surveillance, we're not without tools to fight crime. Law enforcement can still do their jobs through getting a warrant, and private entities will still have an interest in ensuring that their customers are operating within some bounds of the law.
I think that's a great observation, that it's not in anyone's interest to do business with criminals. I think that should be very intuitive to everyone. I certainly don't want to do business with criminals. And if you do, any entity, it would be at great risk, even personal risk from doing that kind of business.
Yeah, it's not like everyone is just going to be, say, Bad Guy Inc. is going to go wild if there is no ongoing surveillance. And it's also the case that now, even with all of this ongoing surveillance, crime happens through banks. Crime happens through non-banks. So the right balance in looking at whether something like the BSA is successful or needed is not zero crime. We're not trying to get down to no crime at all. And that shouldn't be the comparator for deciding whether or not we need something like the BSA.
And just to be clear, BSA, Bank Secrecy Act, people might think, oh, this is only banks. We're here talking about crypto policy.
Yeah.
But I think that the BSA extends far beyond banks, right? Like this does affect the crypto policy environment, right?
Yes, it absolutely does. And it raises a whole host of difficult questions in the crypto policy environment, kind of long term. So short term, and even not so short term, crypto exchanges and other crypto businesses have been subject to the BSA for a number of years. They have to engage in the same types of checks on their customers to make sure their customers are who they say they are. They need to engage in the same type of surveillance for suspicious activity reporting. And they're subject to the same rules as money service businesses under the crypto or under the Bank Secrecy Act rules and the anti-money laundering rules. We've heard over time that applies regardless of whether you are a centralized crypto entity or a DeFi protocol. That obviously raises a lot of questions as to how does a DeFi protocol comply with these types of requirements. And I think there's DeFi protocols that don't try. I think there's DeFi protocols that try. And there's a decent amount of variation in how that's being dealt with in the industry right now. But we're also hearing on Capitol Hill, it's been the case that the Bank Secrecy Act just continues to expand. There was another expansion in 2020 that kind of took the regulatory requirements for crypto and enshrined it into legislation to make clear that crypto truly is covered by the Bank Secrecy Act. But we've recently heard Elizabeth Warren and Roger Marshall in the Senate have proposed a further expansion of the Bank Secrecy Act in the crypto space, with Elizabeth Warren's usual talking point that crypto is just for crime, which we all know is not true. But that proposal would seek to expand AML requirements to self-hosted wallets and other crypto circumstances that are much more like using cash than running your money through an exchange or a bank. It's a dramatically different way to think about the Bank Secrecy Act, and it's a very dangerous way to think about the Bank Secrecy Act, to apply it to crypto in that way. It's a dangerous way to think about it because it's a pretty short hop to doing the same thing to cash as well. That type of expansion is, say, really, really terrible.
I'm glad you brought up the Warren and Marshall bill. I know that a lot of people have talked about that. It's been covered by the Blockchain Association and others. And it effectively makes the whole industry illegal, right? Isn't that there's no way that the industry could comply with those types of regulations?
Yeah, exactly. It would basically tamp down everything. And I would say it puts unwarranted intrusion onto individuals. We've always had a zone of privacy in this country where you were able to use cash without the government being able to track it individually. Crypto on a peer-to-peer transaction basis is essentially digital cash in that way. And say having individuals responsible for their own AML obligations is basically impossible. And it really takes away the benefits of being able to engage in peer-to-peer decentralized transactions.